So you've got the entrepreneur bug and maybe you're toying with the idea of having your own business. Maybe you have a job and you're just not sure yet if you want to get out there yet. Well, in this video, hopefully I'm going to give you guys that extra push and give you 4 reasons why you need a business, even if you already have a job. Let's get it. What's going on, everybody? Brian Rivera, CPA, and I want to welcome you to the channel. On this channel, I talk all things personal finance, entrepreneurship, and investing. So if you've been around here for a while, welcome home. And for all you new people, consider hitting that subscribe button. So just a couple days ago, I was talking to a good friend of mine, very successful. He's high up there in the food chain at a large public company where he's a software engineer. So he makes a really good salary. So he asked me if I could take a look at his numbers and give him any recommendations where I thought that could potentially lower his overall tax exposure. If you're a W-2 employee, you're actually pretty handcuffed at what you can do, is because you can max out your charitable contributions, you can max out your itemized deductions, you can accelerate your retirement plans, but honestly, outside of that, there's not a whole lot you can do to reduce your overall tax exposure. The tax code was written to favor both big business and small businesses. So I mentioned to my buddy that there is a way to help reduce or soften the blow of his tax exposure. But the way to do that is you got to have a business. Now, I understand you got a full-time job, but you could start a business on the side, and the goal of that business is to generate a profit that could eventually supplement or replace your full-time job. So having a business makes complete sense. And here shortly, I'm going to give you those 4 reasons why it makes total sense. If you've ever read Robert Kiyosaki's book called Rich Dad, Poor Dad, he mentions the cash flow quadrant, where you've got employee, which you have a job, you've got self-employed, where you own a job, and you've got business, where you own a business or you own a process, and then you've got the investments quadrant, where you have investments that produce income. So the long-term goal is always to get to the investment side, but to get to there, you got to graduate. You got to leave the W-2 or the employee to become where you own your job, to eventually own a business, and to now you can get into investments. So let's go ahead and dive into the 4 reasons of why you need to have a business. So number 1 is going to be power. Now, I don't mean superpower, although I would love to have that Iron Man suit. I mean pre-tax purchasing power. Now, what pre-tax purchasing power means or is, it is the ability to purchase goods and services prior to paying tax on it. Now, to drive this point home, I'm going to give you a quick illustration with some simple math and some simple tax rates to drive this point home. So for ease of illustration, let's just say you have a $100,000 job as a W-2 employee and you have a $100,000 income as a business owner. I'm actually in the market right now of potentially buying a new computer for my office. So let's just say both the employee and the business owner are both in the market to purchase a computer that costs $3,000. So the W-2 employee will have $100,000 in wages, and we're going to assume a 30% tax rate. So after paying income tax on those W-2 wages, the employee now has $70,000. Now the employee is going to take that $70,000 and go buy the computer. So now that they purchased that computer for $3,000, they are left with $67,000 after paying income tax on their wages and also buying that computer that the employee wanted. Now, let's just say you're the business owner. The business owners had a really good year, made $100,000. Decided in December that they wanted to buy a new computer to use in business. So they went out and purchased a computer as a business deduction. So that computer cost $3,000. Now the net income for that business is $97,000. We're going to take that $97,000 of net income the business owner has, and we're going to apply a 30% tax rate. Now, after applying that 30% tax rate, the business owner now has $67,900. So if you compare the take-home pay for the employee versus the business owner, employee has $67,000 left, while the business owner has $67,900, which is a $900 savings just by purchasing that computer. So what does this actually mean? So what this means is that an employee will pay 30% more for goods and services than a business owner who could use the same exact expense through his business. So you're paying 30% more for goods and services. So I know my tax savvy folks are looking at this and they're going to say, hey, you didn't include self-employment tax. Well, self-employment tax is 15.3% for the self-employed individual. However, the government produced the Tax Cut and Jobs Act a few years ago, which allowed a business owner the qualified business income deduction, which is 20%. So that deduction is actually going to negate what you pay in self-employment tax. So that argument is now mute. Reason number 2 is going to be business deductions. Business expenses are the costs of carrying a trade or business. Now, if the business operates to make a profit, those expenses become deductible. Now, what the guidance does not say is, it doesn't say that the business is profitable. It says it is operating to make a profit. So you're going into business to make money. A lot of times with small businesses or new businesses, they don't generate a profit in those early years. So you can continue to write off those expenses. Your business will just be operating at a loss. Now you want to be careful with some of the hobby loss rules, is because if you continuously run losses through, IRS could disallow your business. So to be deductible, that expense needs to be both ordinary and necessary. And that expense needs to be something that is common in your business, trade, or field. Now, generally speaking, you can't deduct personal, living, or family-related expenses. Now, if you do have some costs that you both use on the personal side and on the business side, you can take an allocation of what your business use is and claim that as a business deduction. A great example of this is the home office deduction, which is a deduction that a lot of people are using right now. It's because they're working from home. So if you work out of a home office, you can allocate a portion of the household expenses against the square footage of your home office. So that's gonna be anything that's an indirect expense. Outside of that, you may have direct expenses that used to run your business or trade, and that is fully tax deductible. So number 3 is going to be the solo 401k plan. Now, the solo 401k, hands down, is the greatest retirement plan known to mankind, and I'm going to tell you why here shortly. So if you're an employee and you're working for a company and you want to absolutely max out your 401k, right? You want to max it out. The most you can put in as the employee in a given tax year is $19,500. Now, if you're a business owner, let's say you open up a solo 401k plan under your business. Well, now you can do the $19,500 as an employee because you're an employee of the business, and you can also do a 25% profit sharing component capped at $37,500. So the max you can do in 1 year under your solo 401k plan is $57,000, and that's going to be for tax year 2020. Now, the other cool thing about having your own 401k plan under your business is that you actually have a Roth option. Now, a lot of times when you're a high income earning individual, you can't contribute to a Roth IRA. However, if you own a business that has a solo 401k plan, you can actually have a Roth option. Now that you have the Roth option, you can now contribute into a Roth plan, which is the best vehicle to accumulate tax-free growth. And there's also tax-free distributions. So that's a huge benefit if you decide to build your nest egg through a Roth. Let's just say you absolutely max out the solo 401k and you want to supercharge your retirement. Now, because you have a business now, you could also enact what's called a defined benefit plan. What a defined benefit plan does is it allows you to get well beyond the $57,000 contribution that the solo 401k offers. It's designed for high incoming earners. It's basically more or less a pension plan that you get to supercharge, and you do need to involve an actuary, which does some calculations based on your tenure, based on your salary, but it does allow you to get way above the $57,000 mark and contribute well over 6 figures into a retirement account. Number 4 is going to be generational wealth. So one of my favorite proverbs says, a good man leaves an inheritance to his children's children. Now, the definition of generational wealth is wealth that is passed down from generation to generation. So generational wealth takes many forms. It can be in the form of traditions, knowledge, customs, best practices, but typically when people talk about generational wealth, they're referring to financial wealth. And basically how you build your financial wealth, the 3 ways you can do that is through, long-term investments or passive income. Maybe you have a long-term investment portfolio that produces dividends. That's something you can pass down to the next generation. Maybe you have a real estate portfolio, you've got real estate property that's generating cash flow, and that is something that you can pass down to the next generation. Maybe you have a business, you're a business owner, and you have clients, you got a customer base. Business is something that your kids can fall into and they can take over the family business. Or maybe they don't want to do that. Maybe they said, you know what, Dad, I want to do something else. Well, they can take that family business and sell it to somebody else because it has value. If you're strictly an employee, well, guess what? You don't have the opportunity to sell your kids, or your kids can't sell your W-2 job. W-2 job is next man up. So building generational wealth through a business is something that you should think about when you're considering starting your business. So moral of the story, big picture, owning a business has a lot of good positive impacts, right? You get pre-tax purchasing power, you get awesome retirement plans, you get business deductions. You also got generational wealth where you can now pass this down to your kids. Now, I also recognize that business ownership is not for everybody. You no longer go from a 9 to 5. You literally go to another kid, right? Your business is something that you're working around the clock. However, if you find something that you're passionate about, it doesn't even feel like work because you're operating in your purpose. So if you can find something that you're passionate about, you can start a business and you can make money doing it. I feel like you got your cake and you're eating it too. If you found value in today's video and you feel like you got that extra motivation to start your business, don't forget to hit that like button. Don't forget to smash that subscribe button. And I sincerely wish you guys the best of luck on your business journey. Have a good one.